Mr. Governor, my question, you won't be surprised, relates to regulation and growth. You alluded to many of the reforms that have either happened or are being implemented, but being very disciplined, I will obey what the editor suggested in terms of being forward-looking. So my question would be, what sense checks, if any, has the FPC put in place, or would you recommend that the FPC put in place, so that as we go into very important months ahead, where all the details of the ICB and PCBS recommendations are going to be, finally detailed, that we both get what policymakers and I think all of us want, which is robust legislation, but that we don't get, and I'd say two things. One is we don't disadvantage UK PLC, and specifically our small and medium-sized companies that obviously could be affected by these structural reforms. And second, and very importantly, that the investability of UK banks is again good. And vis-à-vis not only US and German banks, but also thinking about the financial sector vis-à-vis other sectors, as we go through these very important structural reform details that our friend Bill Winters and others have been working on.
I think a couple things. One is we will, and we have commented on the, as you know, on the PCBS, the current set of recommendations are working through the legislation, and that's in the public domain. Obviously, we the FPC, but the broader bank, the PRA itself, and the broader bank are taking a clear focus on the prudential aspects, both micro and macro prudential. We have secondary objectives, which are to support strong, sustainable, and balanced growth effectively in the cases of both, and we take those very seriously. So it's prudence, but in the context of having satisfied that, we support it. And so this isn't, to use another phrase you were drifting towards, this isn't about stability of the graveyard, it's about appropriate levels of resilience in the system. Now, a resilient UK banking system is going to perform better. I mean, ultimately, investors will make those determinations. But again, if you look at, since the much maligned, but correct, in my opinion, certainly, FPC effort, price-to-book ratios of UK banks have gone back to towards unity from heavy discounts. Things that make this system work, make it work better at the core, are ultimately going to change the Sharpe ratio, I can use it with you, of investing in UK financial institutions. But we're conscious of, we're absolutely conscious, it's a macro institution, ultimately, the Bank of England, and we're very conscious of of getting that balance right, so that once we've achieved those appropriate levels of resilience, that it's not overdone. So I'll leave it there.
Thank you, Governor. Evelyn to Rothschild.
Mr. Governor, the FT has been through many financial crises and survives today in a remarkable way. I would just like to point out and ask you a question. 5 years ago, when we had our financial crisis, I think it's fair to say that the general public lost confidence in the banking system. That confidence has been eroded. It's not only eroded in the United Kingdom, Europe, and the United States. Can you answer me on the basis that you think confidence is coming back, and do you believe that central banks, generally worldwide, should be more open and more publicly aware of the average person who tries to open accounts and has confidence in the bank? Not only your bank, sir, but everyone's bank.
Yeah. Well, I think you're absolutely right. There's been a loss of confidence in banks. There's been a loss of confidence in the system. And higher than that, there's been a loss of confidence between authorities in the system, or trust between authorities in the system. And we've been going through a process of trying to build that back up. What's necessary, and confidence, the Montag Singh Ahluwalia, his famous version of this, which it grows with the rate of a coconut tree and falls with the speed of the coconut. we've had the fall, and now it's got to be grown back up. How do we nurture it? Capital is part of it, just that's obvious. I think capitalism is part of it, actually. Making the system fair, so ending too big to fail, is a large element. There is a need. I think compensation has been a big element from a public perspective. I would suggest that as important as some of the initial compensation reforms have been, so to get proper alignment of employee incentives, vesting and clawbacks, et cetera, as important as those have been, compensation structures can ultimately replace culture within an organization, and so institutions really need to get their culture right, and in the end, their core values right. And that ultimately goes back to the end customer. So understanding that without a prosperous real economy, prosperous customers, the institution itself isn't going to prosper. So they have to be speaking to these people and hearing the messages. So I'll finish by just saying, look, I think central banks do recognize, certainly the Bank of England recognizes this fundamental hit to confidence. And I'll say one thing, just personalize it. It used to really strike me when I would come to the UK, to a slight lesser extent to the US, from Canada as governor of the Bank of Canada, how different things were, how different the attitudes were towards the institutions, how much confidence had been hit. And I don't know if it was fear, but it was certainly loathing had replaced confidence in that regard, and gives a sense of the scale of the challenge.
Next question. A question from the audience? Yes, ma'am. There we are, yes. Francis.
Governor, it's good to see the bank taking account of unemployment in its assessment of the economy, but isn't counting numbers in and out of work a bit crude? Shouldn't we also be looking at the record number of part-time workers seeking more hours, and of course what's happening in terms of people's real pay and living standards?
Okay. Let me say this. I mean, certainly in terms of our guidance, we take into account unemployment. The unemployment rate is as you know, the threshold for a reconsideration of monetary policy, whether or not we would adjust our overnight rate. But we've tried to make very clear that we look at a much broader range of indicators, both in terms of slack in the labor market, but more broadly slack in the economy. And when the economy gets to that staging post of 7%, we will look at, and we do even today, look at other factors such as the proportion of workers who are working part-time but want to work full-time, which is in the upper teens and used to be substantially lower. We look at hours worked, and what we've seen over the course of the last year is that there actually has been a steady increase in the amount of hours worked for people who are working. There is a revealed preference for people to work longer, and unfortunately that may relate to what's happening with wages and underlying wage pressures, which are very low at the moment. It may also have to do with the shift of employment from the public to the private sector, so we look at those factors. And we'll also look at other factors in terms of proportion of long-term unemployed and whether or not those workers can come back into the market. So we do look, and we will continue to look at a very broad range of labor market indicators to get a true indication of what the degree of slack is in the labor market, and as a consequence, what that means for activity and inflation. And remembering in all of this that while we're using the unemployment rate as a threshold to then take stock, we are above and at the beginning and at the end inflation targeters, and our job is ultimately about getting inflation back to the 2% target on the appropriate horizon.